please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Nikkei, in fact, it had opened up in the green and it's currently holding in the green as well.
The midcap index, look, for last 2 days it's underperformed 3 days, but even after that it's up 2.7% this month and the Nifty is up 2%. So these phases will happen.
Oil price is now enjoying the optimistic atmosphere.
Up only 12 on the Nifty, 75 up on the Sensex. So it's 10,758 as far as the Nifty is concerned.
The construction sector, the road building sector has had a reasonable run over the last couple of years. I think that they'll continue their decent run.
IT companies are clearly seeing some favor today, that after Morgan Stanley has upgraded the sector outlook for the IT industry to attractive.
Reliance's investments have tripled employment opportunities in Bengal in just 2 years.
Markets, as we begin this edition of 130, are at their day's lows. 10,695 was the low. It's broken down to 10,693.
Okay, what a volatile day it's been, not for the faint-hearted, and as we speak the Sensex is back in the green, so been all over the place. Of course, midcaps have taken a bit of a tumble in today's trade. Hi Sonia, good afternoon.
Hi, good afternoon. I'm sure a lot of people must have even burnt their fingers, right? That's the kind of choppiness we've seen. But does it have anything to do with the kind of macro cues because of the way the rupee and the bond yields are moving? Yeah, I think the money market clearly is the center of today's big move that you have seen, Sonia. So the macro issues are sort of back to haunt the market. The bank nifty is a bit soft. But you know, once again, if you follow the template of this market, you make money by buying dips and not chasing momentum. And chase momentum, the market punishes you, at least in the near term. And that could have happened. IT has moved up though, and that also is because of currency. I think the financials are down, IT is up, so they have sort of negated themselves as far as Sensex is concerned. But in the mid caps, I think this is the third day running that the index is down. We're going through a bit of a deleveraging pain. It has happened in the past. You know, the market's done up a lot, then there's a bit of a deleveraging. After that, once again, you know, mid caps start to rally. So this deleveraging could happen maybe for a couple of more days, and you might see some excesses being taken out, a lot of leverage being taken out, which is healthy for the market. So all in all, I think it's okay. It's not that the market has collapsed, you know, on any other. The reason for that is the global cues are still strong. So you don't want to, you know, run your luck too much with a short trade. You take a short trade, maybe you make profit, you unwind, and that's why you're not seeing big decline in the index. But mid caps is a bit of a problem, but that could be just an unwinding trade right now. So it's not like a trend reversal or anything. It's just a bit of choppiness that we're going through.
Oh yes, you know, we hit new all-time highs yesterday. Yeah. So you know,
it's going to take a few days, if not more.
It's okay, Sonia.
Okay, well, let's take our viewers through all the top headlines. We'll, of course, discuss all this and more through the course of the next 1 hour. The markets are at the day's low as a weak rupee and rising crude concerns hurt stocks. Key indices are a bit volatile, but the mid-caps take a hit today with the index down nearly 2%. The rupee trades at a 3-week low after India's trade deficit widens to a 3-year high on higher oil and gold imports. But a weaker rupee brings cheer to the IT stocks. Morgan Stanley too comes out with a bullish note, expecting 2018 to be a turnaround for the technology sector. And Federal Bank is the top F&O loser today as slippages rise in the third quarter. The management, however, says it was a good quarter apart from treasury losses and slippages from one education loan. And the GNFC stock cracks in trade after shutting its Dahej plant due to a gas leak, while Delta Corp hits an all-time high as profit after tax jumps nearly 5 times in the third quarter. And the OPEC-led production cuts and robust demand drive crude prices to nearly 3-year highs. Also impacting prices is the weak dollar, which fell to its lowest level in the last 3 years.
Okay. By the way, just look at Infibeam's intraday chart. Interesting, some of these stocks, the way they are moving, and Axis Bank is moving a bit higher. But how should you position yourself in this last hour of trade? We have Ashwini Gujral and Prakash Kaba now joining us with closing strategies. Good afternoon. Ashwini, is there a last hour trade? It's been very volatile on the Nifty and the Bank Nifty, and of course the mid caps have seen a bit of a tumble today.
Well, it's been fun. So I guess you know, large cap indices are hiding more than they are telling you. If you take out the IT performance, the market is probably down at least 70-80 points. 4% on a large index is unusual. Other than that, there is no sector in the positive. 1400 stocks are down, 263 are up. So what does that tell you? That tells you that if tomorrow, IT index does not go up, there'll be trouble. So like banks didn't follow through yesterday's gain, let's see if IT can do that. But overall, it's not a great market where you take positions and you hold it and you put a stop. Stops, etc., will get hit. So this is a market where you should be pruning out mid caps, some which have run wildly, because the broader market is also collapsing without any bad global cure, anything of that sort. But I guess you can say it's a range bound market. 10,550, 10,750, 10,800. So yesterday's expansion hasn't really followed through. So just the range is moving up on the upside. But now the problem is you don't have any mid caps to trade on the upside also. So let's see how it plays out. Unclear, but definitely momentum has flagged. As far as individual stocks are concerned, L&T Finance is a sell with a stop of 178, target of 166. Manappuram is a sell with a stop of 120, target of 108. Bajaj Electric is a buy with a stop of 550, target of 575.
Okay, Ashwini, you've been alerting us about the caution in the system for a couple of days now. Is there any sign that this could be an early trend reversal in the market, or not just yet?
See, why have we gone up? Because of global cues. So basically, if global liquidity turns, if global markets start to correct, only then you will correct. Even if oil goes to 75, you'll correct for a day. Again, next day, if global markets are up, you will be pulled up. So this is more of a pulled up type market, and the moment global markets turn, or maybe we are waiting for the budget, there will be some pivotal event which will turn this market. Too early to take shorts and sit with your short positions for a long time. Yes, intraday you can have those positions maybe for a couple of days, but you can't say that the market is turning or getting ready for a large correction, because things have turned in the past equally fast as well.
Okay, L&T Finance actually is right now turning the weakest. Just pull out the intraday chart of that stock. Of course, Ashwini, that's your 230 call, but technically it's been weak since that day of recap in the banks and been the weakest NBFC stock. What would be the next levels here to work with?
See, it kind of found support at the 200-day moving average. Now, if a stock comes extremely quickly back to the 200-day moving average after bouncing from it, then sooner or later that average will get broken. So 165 is your line in the sand, and the way it's turned, NBFCs, etc., if yields are at those levels, chances are financials will take a back seat. So my sense is once 165 goes, you could have a deeper correction even on L&T Finance.
Okay, Prakash Gaba is also here with us in the studio. So let's get a lowdown of what he's thinking this afternoon. Prakash, what stocks would be on your list?
To me, I think the market we spoke about in the morning was somewhere closer. Support we had around 680 to around 700 zone. It's found there. So I feel that some kind of a consolidation is required maybe tomorrow as well, and maybe later part of the decision we could see an upmove. I have two stocks, one long, one short. Dr. Reddy looks good to me, and maybe we can see a climb to levels closer to 2530 zones, stop below 2445. And Mahindra & Mahindra looks a tad weak, more of a fatigue pattern out here developing. Possible target on the downside in the vicinity of 727, stop above 750.
Okay, let's move on now. The stock of the day today is Federal Bank for all the wrong reasons. Here's Abhishek in Stock 360.
Well, Anuj, they actually reported an operationally very weak quarter. So if you look at the gross and net slippages, the gross slippage has increased to 435 crore from about 289 crore on a YOY basis, while net slippages, that is, you deduct recovery, upgrades and write-off from the gross slippage, the net slippage is at 190 crore, which is at multi-quarter high. You look at the operating profit growth, that has declined from 46% in Q3 FY17 to about just 18%, and and that is not in line with the balance sheet growth. Advances growth is at 22%. Net profit growth has been at multi-quarter low at 26%. This is despite the fact that they made lower provision this quarter in comparison to the slippages. Loan growth also has come down, right, from 31.5% in Q3 FY17. The loan growth has declined to about 22%. While the loan growth has declined, the annualized slippage ratio has increased. So that has increased from 1.6 to about 2% now. Now, gross NPA ratio is the highest in last 5 quarters at 2.52%. In absolute number, the gross NPA has increased by 25% on a YOY basis, while the loan growth has been 17% over the last 5 quarters. NIM, the positive factor in this result has been the net interest margin. That has remained healthy at 3.33%, albeit the fact that cost of funds has remained under control on the back of low-cost deposit share being at 33%. Apart from that, the management has guided for a rupees 350 to 400 crore of slippages over the next couple of quarters. The normal run rate has been between 245 to 285 crores. So the guidance in terms of elevated slippages has not been taken lightly by the investors. Back to you.
Okay, well, thanks for that. We're going to pose this question to our experts. SP Tulsian joins in. Market expert Anand Tandon is also with us. Gentlemen, afternoon. Mr. Tulsian, I want to start with you. We spoke to the management of Federal Bank a while back, and they did indicate that, the slippages run rate will remain high over the next few quarters to the tune of 350 to 400 odd crores. What's the sense you're getting? Because this stock has been a great performer. It's doubled in less than 2 years. But do you think that it's topped out, or maybe just a couple of quarters pain and then the uptrend could resume?
See, taking a call on the results and hearing the management commentary, and if you really take a call on the financial performance, I may, if I wish to look for the negatives, I may highlight those. If I wish to look positive, I may highlight those. If you take 2 positives, NIM of 3.3% plus and the credit growth of 22%, I think these are excellent numbers, in the current situation. And if I just take the income stream, or maybe, the treasury profit has been seen lower, I'm taking a QOQ call on the income breakup of the company, of the bank. And if you really see the wholesale, the retail banking, has really shown excellent growth of 347 crore PAT against 228 crore on a QOQ basis, which is excellent for the core operations of the bank. Come on the provisions figure, they are almost same. Come on the net NPA, the net NPA has just risen by about 4 basis points. And if you really take a call on the return on assets also, they have just corrected by about 2 basis points in spite of the treasury income, having corrected by about 50%, by about 50 crore. And we all knew that the portfolio is going to take a hit, and we are going to see the lower income or lower, coming in from that segment. So I don't think that, and if you really take a call on these kind of stocks where you really want to mop up, in fact, these are the opportunity where one quarterly numbers comes little bad, and you start buying them. Maybe the current book value of 50 rupees or maybe 50 to 53 at the end of the March quarter, and you are getting the share at a price to book of about 2 times, which is again seen quite cheap for such a large size bank. So taking all this into consideration, I think that all the negatives seen having largely factored into, I may, that's what I say, that I may, see taking the negatives also keep highlighting, but few positives which are largely on account of NIM and credit growth. And maybe the income breakup, largely the ramp up seen in the retail banking stream, that is seen extremely positive. And I think that now at 105, if someone has a little longer horizon, maybe of about 6 months, the stock, in spite of the management, having said that for the next 2 quarters, the slippages may be seen higher, the stock is looking a good buy. It is incorrect to say that in the next 3 months till we see the Q4 numbers to be out, we will not see the rally into the share price, and the same commentary will keep bogging down the share price from here on going forward.
Oh yes, I remember even 2 quarters back, I think this story had played out for Federal Bank, and after that also we had seen this recovery. By the way, something's up in Just Dial, because we pointed this out 2 days back as well. It's having massive rallies even on weekdays, and again taking out those those highs that it used to make about, say, 2 or 3 months back. And today also, if you see this kind of move that's taking place in Federal Bank, again in a weak, in Just Dial, in a weak market and with kind of volume. So just keep an eye on this stock. But we have Anand Tandon also joining us now. Anand, good afternoon. I wanted your thoughts on the move that we have seen in the banking stocks today, especially the PSU banks, and the yield move. Do you think these stocks are due for some more correction now?
Well, I mean, in the near term, obviously, I think most people know that you are looking at slightly higher interest rates during the course of this year. That said, I think real question for PSU banks would be whether their NPA book will improve or not. And if that improves, and that is what is being factored in most of the analyst estimates, then that remains one of the sectors that will be the best contributors to earnings growth this year. And therefore, you may actually find that that is a space which may actually do well. I mean, if you look at the estimate for the next year, you're really looking at metals, public sector banking, and perhaps auto as some of the largest contributors to the earnings growth. And it's unlikely that if there is earnings growth, that the valuation can continue to fall. As I said, all this is underpinned on the basis that there will be, reduction in NPA. If that doesn't happen, obviously, this entire thesis falls on its face.
Okay, many more questions coming up, gentlemen, but we need to take a short break now. The market is still down about 0.2%, so largely quiet up until now. Our closing bell money control question of the day is the comment that came in from Jonathan Garner of Morgan Stanley. He says that 2018 will begin well, but end badly for emerging markets. Do you agree? Log on to moneycontrol.com, post your responses there, and we'll read out some of the most interesting ones post 3:30 p.m. today. Also, on the other side of the break, we'll kick off a brand new weekly segment called Kedianomics, where Sushil Kedia will join in to talk about the technicals of global equities, commodities and currencies. Stay tuned. Also on the other side, we'll discuss a sharp fall in the rupee and the jump in yields today, because of which NBFCs, PSU banks are taking a big beating. Stay with us. Okay, Just Dial is really zooming in trade at the moment. So that's one stock that's moving quite a bit. But apart from that, you also have some more names in the broader markets that are seeing some price action. Gati has now suddenly moved to the high point. So there's definitely some price and volume action on Gati. That stock should be up for you, 3% higher now. And a couple of these cement stocks have had it really good today. So, we spoke about Prism Cement earlier. Heidelberg, JK Lakshmi are also looking pretty good. Sandeep Wagle joins in now to tell us how to approach the last 45 minutes of trade. Sandeep, hi, afternoon. What stocks would you be advising traders to buy or sell now?
Afternoon, Sonia. I would go with a sell in a Can Bank, stop loss of 345, target 333, and a buy in a HCL Tech, maybe on a correction, 936, stop loss 981, target.
Okay, thanks a lot for that, Sandeep. Let's invite our next guest, Sushil Kedia, now joins us to talk about the technicals of the global equities and, of course, a lot of stocks as well. Sushil, hi, good afternoon. So, today's big move has been on the currency, dollar rupee. We spoke about it in last introduction as well. Do you think today is a bit of an aberration, or is today signifying something bigger?
Well, the rupee dollar contract has moved a couple of days before the dollar index. All the currencies in the world will not move exactly on the same date, and dollar index has formed a low and a reversal pattern yesterday. So a lot of minds may look at kind of a big reversal happening. As of now, it's a reversal while the rupee has led, but I think there are a lot of powerful resistances overhead that are not too far. So maybe if we are currently close to 64.08, we might at most go to 64.40, perhaps not more than 64.20. The chart is still very much poised for the recent lows to be broken once more, very likely by next week. As of now, that's the call. But yes, when that new low comes, and again a huge consensus comes, dollar has melted, the world is getting over, I think that will be the time for taking a call of a sustained rally in the dollar for 6 to 8 weeks, maybe an entire quarter. But as of now, dead cat bounce within a bearish move, and which should get reversed within a few days more.
Okay, I like that. The world is getting over. No, I don't think we've reached that stage just yet. No panic mode in the market. Sushil, hi, afternoon. Good speaking to you after a while. I want to talk about stocks because there's plenty moving around. The IT space has been the big gainer lately after the numbers had no negative surprises this quarter. Are there more legs to this rally?
See, the pattern in them is one which has created a very steep, spike in the rise in the last few days. So there are no good entry points to be on the long side. Obviously, this kind of strength and momentum you can't go short of. So those who have a have a long position in them or investment positions, the only advice you can proffer safely at this point is be in no rush to sell. It's definitely for the brave hearts. It's little late to get in because the noise can come in any time. The trend is still intact, but the near vertical rise that has happened in the last 10-12 trading sessions doesn't make it a place for making large new long bets, but certainly cling on to your longs. The ride looks good.
Okay, what about mid-caps, Sushil? That's where the action has been. Anything that looks good on chart?
See, there's a very important thing that the broad mid-cap spectrum can tell us about the broader market also going into the budget. For a very long time, this is a sort of a proprietary or a personal favorite indicator I've been using, where you divide the price of the Nifty, the NSE 500 index by Nifty, and by common sense, when this ratio is rising, it means markets are getting into ebullience or confidence because money is getting scattered into smaller stocks. So this ratio does not show any signs of this uptrend being under any threat or any kind of a reversal building around in a hurry. Perhaps for the next fortnight, there will be a wider ebullience and money getting into more stocks. And as of now, we can classify them as mid-caps, more like, revival stories. After a sustained strong upward bounce and consolidation, Jayaprakash Associates and RCOM for traders are still looking like will again go back to the recent highs and more. I'll give you a much deeper roundup of the entire mid-cap and small-cap spectrum over the next week. But broadly speaking, this is not a market to be looking for short ideas or, to get out in a hurry. The market is humming along very well. And, if anybody gets a sense of acrophobia or a vertigo just because we are close to 11,000, I'd like to remind them, Narendra Modi at 67 flies up, staircases when boarding planes. So let's not bias our minds just because of a number. The market has strong momentum. Let's stick with it.
Okay. I like those analogies. But, since you're talking about gravity-defying moves, let's talk about some stocks that have been on an uptrend, right? Banking stocks mainly. Names like ICICI Bank once again back into the fore. HDFC was a big mover yesterday. What's your, what are your charts telling you?
See, the Bank Nifty was behaving like a laggard when we spoke last Tuesday. And over the last 4 or 5 trading sessions with, this huge spike up in ICICI Bank, which is what I was worried about last week. Having performed, Bank Nifty is sort of restored back into a similar quality of strength as the broader Nifty. The bad guy, so to say, SBI, it might have another 10 rupees down. And when that also joins in, I think, over a trading time frame of next 8 to 10 days, Bank Nifty, the drift is upwards. And maybe, for those who are still searching for long ideas, maybe in a couple of days, with or without 286 getting seen, using that more like a stop, maybe I would hunt for new large long trades in SBI if a reversal is confirmed. HDFC and HDFC Bank are behaving very similar to, like those dark horses, despite, these sustained strong uptrends. I am not predicting, but mentally preparing myself to be ready, not to get shocked if any kind of a spiky, strong burst upwards move happens in them. You can't predict it, so I will not recommend a long on them. Those having longs, please cling on to them.
Okay, Sushil, that's for today, of course. Thanks a lot for joining us. We'll talk to you next week and discuss some more charts as we build along on this segment. That's Sushil Kedia. By the way, the market is now at the low point. Interesting, because it's just see this intraday chart of the Sensex. That's down about 75, but really the mid-cap side of the market is the index itself is now down about 2%. Just putting it in context though, it's still outperforming or it's still up month to date. That's been the kind of run that we have seen in the mid-caps, and of course last year was phenomenal. The Bank Nifty also down about 115 points. Before we take some queries on social media, Ashwini, just your thoughts on this last bit of selling, where even a stock like Infosys has seen a bit of a sell-off or a bit of a selling from the high point.
It's a very narrow market. Hardly 250 stocks are up now. How long can the IT index remain higher if there is, overall selling pressure on the market. So a narrow market will not sustain. If you think that, for the next 5 sessions, IT will keep going up 4% while the rest of it corrects, I don't think that always works out. The market breadth was narrow yesterday. It's even narrower today. So finally, IT will also give in. And that's what we need to see, whether, tomorrow, day after, we can come back, or this narrowing of the market will lead to a topping out. That's still not clear. We'll have to wait for a couple of days to get some clarity on that.
Okay, interesting. Let's do one thing. Let's take some Twitter queries then. We have first one from Sham, who has 175 shares of Glenmark at 625 and wants to know if he should sell. So Mr. Tulsian has managed to make a good entry actually, and it's a stock that you have liked as well. Your advice here?
Since I don't know the time horizon of this investor, if he has a long-term view or maybe medium to term view also of 6 months plus, I'll advise him to remain invested, because the pharma seems to be returning back, and that could be the theme for 2018 in view of the US FDA clearances and all that. And in fact, in case of Glenmark, the things are not seem to be so tough for on the US FDA front for the company. And if that happens, then obviously the US market growth will also be seen returning back for the company. So if he has a view of about 6 months or so, I'll advise him to remain invested. Or if he has a near-term view or short-term view, then he can look to exit at because he's almost seen to be at the cost price of his investment. Yeah.
Okay, well, Shyam, I hope your question was answered. Next up, we have a query coming in from Prakash. He has shares of Karnataka Bank at 167 rupees and he wants to know the way forward. He's sitting on a bit of a loss now. Karnataka Bank is trading at 153. Ashwini, your thoughts on how he should approach it?
See, it was anyway not a outperformer. Now banks are not having it so good. It's a nothing stock anyway. If I had to do something, I would exit Karnataka Bank and maybe get into a bank which is better in terms of taking a correction. So maybe I would enter a Kotak Mahindra or a Yes Bank, because Karnataka Bank can fall all the way up to 140 and smaller banks, they tend to outperform whenever the downside starts. I don't think Karnataka Bank is heading anywhere.
Okay, our next one, Roy has shares of Philips Carbon at a price of 14.59 and Graphite India at 870. He wants to know whether to hold or sell. Mr. Tulsian, is it a classical case of buying at the peak of a cycle, or do you think he'll get his price back and more if he holds?
See, Anuj, in fact, this is right. In fact, I would say that this is a crazy way of just riding the momentum. When the stocks seem to be all these graphite electrode stocks, or maybe that sector seem to be so heated up, and in fact, they have been showing volatility. This investor has entered at almost at its peak. Maybe he has a probability of 25% of seeing that cost price again. Maybe his cost price, and where he will be advised to look to exit. But he should take this as a lesson that is there any meaning where you are just burning your blood to see the cost coming back with a time horizon of maybe couple of weeks or so. So yes, both are very risky. Firstly, he has entered into the same sector which has been heated up. Even if he would have gone into the two different sectors, then also the strategy would have been right. But I'll caution him that avoid this kind of move of riding the momentum at a crazy valuations and look to exit either now or maybe if he wants to take the risk, because in fact in my view even now these all stocks are looking quite overheated, and I won't be surprised to see them correcting again, because the strong hands will make the stocks to bounce back, but difficult to take a call that how much it will correct and how much then it will recover. So better for him to exit now and take this as a lesson of not to ride or chase the momentum.
Okay, don't chase the momentum. That's a fair point. The market is extending its losses now, so down almost about 80 points for the Sensex. Our final query coming in from Twitter this afternoon. Rahul has 250 shares of Sterling Tools. He bought it at 454 rupees and he wants to know the view on the stock. Once again, this is a gentleman who has perhaps chased momentum, because he's sitting on a loss. Sterling Tools is now at 390. Of course, it's been a huge multi-bagger over the last 20 years, but he particularly bought at a high price. Ashwini, your thoughts?
1 second. Well, it broke out from 260, ran up to 470. See, my advice is, whatever the reason, keep a 10% stop. Because if you start losing 50%, then you don't know what to do. So, you know, you want to buy these graphites, other stocks which have run up, buy them, but assume if you lose 10%, you'll be out. Because it's impossible to advise in this sort of a stock. I think it can correct even further. So be ready for, you know, maybe 340, 350. That's always possible in a mid-cap market that's coming off. So keep that in mind. If I were you, I would take my 10% loss and make it somewhere else.
Okay, fair point. Before we thank Mr. Tulsian, Mr. Tulsian, just thoughts on Just Dial, still up 6%, new 52-week high. Do you think this is an opportunity to exit?
Yes, and it's definitely an opportunity to exit, because if you really see except for the volatility, I don't think that there has been any fundamental change or any fundamental improvement except for these kind of volatility which we again see into the stock. And when you see the fundamentals missing for a stock, it is better to quit at some point of time.
Okay, Ms. Tulsian, thanks so much for joining us. We'll speak with you again soon. By the way, let's get back to the big newsmaker of the day. The NBFCs, PSU banks are in focus. They've been under pressure after not just the rupee hitting its lowest level in 3 months. The bond yields have jumped to almost a 2-year high at 7.56%. In fact, you had the RBI Deputy Governor that warned banks of poor interest rate risk management as well. VG Kannan, the Chief Executive of the IBA, joins us now to talk about that. Mr. Kannan, thanks so much for joining us. What have you made of the kind of spike up that we've seen in bond yields and the commentary that came in from the RBI Deputy Governor?
I can't speak much about the commentary from the Deputy Governor, but we saw post the demonetization a huge liquidity in the system and a lot of deposits in the banks. And in the absence of any credit available in the market, good credit for lending, most banks ended up buying the government securities. Add to that, with the rupee also appreciating, when it went down to 63, 63.25, etc., the dollar purchases or the rupee which has come into the system was also mopped by the government, by the Reserve Bank of India, by means of OMOs. So all this led to a huge supply of bonds and also was lapped up by all the banks with the huge liquidity in the system. However, in the last 2 months, once we saw some fears of inflation, and though we don't really see too much of inflation straight away, but fears of inflation, additional bond issues expected by the government in this quarter, around more than 50,000 crores. Oil prices are going, you've been highlighting it. There's been 69, 70, just almost 70, and 64. All this combined makes a scenario of yields going up. Okay. What the banks have actually had happened is in the third quarter, the yields had come down to around 6.66 or thereabouts. And the sudden spike which happened in the third quarter was around almost 67, 70 basis points. And if the duration of the bonds which they are in the portfolio on account of the excess SLR is anywhere between 4.5 to 6, depending on the different banks. So they have a huge mark-to-market loss.
So, Mr. Kannan, yeah, you know, the reason I asked you about the comments of the RBI Deputy Governor is because he did mention that, or rather, he talks about how banks are buying long tenure bonds and not hedging, etc. We have a couple of auctions coming up. There's one on Friday. Do you think banks will be dissuaded from buying further bonds after the commentary that has come in?
See, basically what will happen is every year, whenever you have a new benchmark bonds coming up, I think new benchmark bonds is normally bought. And if it's going to be something other than the benchmark bond, I think there's going to be issues about the banks buying these bonds, especially if they see that the scenario of interest rates coming down is remote in the short run. So they won't like to have a mark-to-market loss. And add to this, Reserve Bank of India has directed that SLR portfolio comes down from 20.5 to 19.5 in 2 stages, once in December, another in March. Therefore, the actual need for buying may not arise. However, having said this, with so much of liquidity in the system, they may end up buying but they will be a bit cautious taking any long-dated bonds.
Okay, Mr. Kannan, thanks a lot for your time today. By the way, this really the rupee move, almost a % move in currency. You don't see 1% move intraday. This is not a stock that we're talking about. This is a currency that we're talking about. Almost 1% move is what you've seen on the dollar rupee right now. 63.50 something there is what we had seen, and now 64.06. Anand, of course, the 1-to-1 correlation has been long broken, but today IT index has also done well, and IT in general has done well. Do you think it's time to move some money to IT at these valuations, just to maybe as a safety bet in portfolio?
So I've been saying for a while now that this year the story can actually be the export market more than the domestic market. I think a lot of the export sectors are doing well for a variety of reasons, whether it is IT or specialty chemicals or even some of the textiles and so on. So I think you will find that actually IT certainly and some of the other export markets would be the ones that one would look at, given that we are looking at a global recovery happening and the domestic market valuations don't leave you any comfort. That is also perhaps a safer trade in terms of simply the valuation aspect.
Okay, Anand, thanks a lot for your time today. That's the word from Anand Tandon. Ashwini, thoughts on the currency market and money market? And again, is it time to move some money from banks to IT?
See, currency market I don't think should be mixed up with IT. There is a marginal impact, but the way the CNX IT is going, it is pricing in a recovery. It's almost like the mid-cap real estate rally that we had earlier last year. So I don't think it's because of currency. The second thing is that with macros etc. deteriorating, I think we've hit the upper end of the band, which is about 63.50, 63.80. Now we could easily fall back towards the lower end of the band if things get worse on crude etc. Maybe 65, 65.50. So that sort of range should be maintained. But IT, I am very clear something is changing, or at least market is pricing it in. And in 6 months, you may not see the results coming through, but IT stocks will probably be 30% higher. That is the call I am taking the beginning of the year, whether it's under ownership or whatever. The incremental improvement on IT, pharma, metals is going to be much higher than these domestic sectors.
Oh yes, under ownership has played out. Actually Wipro was one of the biggest gainers last year as well. And the IT index, most of the large cap IT stocks did end at 52-week highs. Of course, didn't mean much because they had fallen a lot before that. And mid cap IT, of course, is in a big run altogether. So, IT index is up 3.7%. And just look at that, Sonia. So, obviously, the market is pricing in something, valuation play or whatever, but from 10,000 to 12,000, it's been a huge rally.
Yeah, and there were no negative surprises in this quarter's numbers, right? Yeah. That was taken well. We were just talking about how TCS is getting into a new digital foray as well.
Yes, today also they have announced something with Microsoft, and I think it's recently won an order as well. So
they're evolving with the times, I guess.
Yeah, could be. At least that's what the market believes, right? And the market thinks that maybe TCS, Infosys kind of companies will be able to adapt. But anyway, we'll take a break on that note. Up next, of course, we'll get you the BTST calls. Welcome back. Well, quite a bit of selling happening right now in a lot of stocks. Just pull out the intraday chart of Indo Count, and that stock is right now plummeting, in fact down about 8% now. It has had a big rally, and of course a lot of these stocks are seeing quite a bit of correction today. Of course there was reason as well, textile clearly going through a bit of a problem. We spoke to the management as well, and I think that stock really is right now ending at the low point, so just keep an eye on that one. By the way, time for the BTST call. Ashwini Gujral and Prakash Kaba still with us. Ashwini, your thoughts first. We are ending nearly at the low point as far as the mid-cap index is concerned. Of course, on the Sensex and Nifty, we have been spared the blushes by IT. For index, is there a call, and what about individual stocks?
I kind of track this Nifty Next 50, which is done right now down 536 points. That's basically taken out, I think, about 10 days worth of data on the left. So this is a fairly large move on the mid caps, possibly will have follow through. In the meanwhile, I think IT, banks, The pull and push will continue. One day banks do well, next day IT does well, etc. But overall, I think we are not going to make a lot of headway. From lower levels, you'll find support. At higher levels, you'll find resistance. But mid caps possibly could have a 3-4 day type correction. As far as BTST is concerned, Oro Pharma is a sell with a stop of 650, target of 625. Coal India is a sell with a stop of 301, target of 286. And Gati is a buy with a stop of 144, target of 156.
Okay, well, Ashwini, we do have our question of the day, which is a comment coming in from Jonathan Garner of Morgan Stanley, where he says that 2018 will start off well for emerging markets, but will end badly. Is that a view you concur with?
Will you hold him to it at the end of the year?
I'll try.
Mark Faber has been saying for 10 years S&P will fall 50%. All these guys are gurus. Every day they, say something. If it proves correct, they become the next guru. So I care two hoots about all these predictions. Nobody knows what will happen. I'll make money whether it goes up or it goes down.
I'm not asking you about your view on his prediction. I'm asking you your view on the market.
Who can say? People are saying this last to last year. I don't think it creates any value. I mean, how does it help me in trading? It does not. Maybe US markets have gone up for last 9-10 years. It's very, very, very overextended. Let's see. Maybe 2018 is bad, but we will not outperform if US falls. There is no delinking. We are totally linked. So if that falls 10%, we'll probably fall 10% also.
Okay, Prakash, your PTSD calls, and is there an index trade?
I feel that Nifty might see a bit of slide. It's more into a consolidation zone. Maybe around 10,550 or 600, 660. Sorry, 10,650 could be a strong support zone to work with. The interesting thing is banks have not fallen as much as Nifty. So there is hope in Bank Nifty. Nifty, if it crosses 10,760, there's a buy tomorrow. And Bank Nifty, the crucial level to watch would be 26,050. The moment it crosses there, could be a buy there.
Okay, by the way, sorry, please go ahead.
I have two shorts. Coal India certainly is a sell. Looks like it can see a slide to levels closer to around 290 zones, stop about 300. And another stock is a sell, STBT, is HPCL. Can see a slide to 398 zones, stop about 420.
Okay, just wanted to point out Dish TV's intraday chart. Just pull out that stock and see the kind of big slide that we're seeing right now intraday, and that stock has moved to low point of the day. So Dish TV is down almost 8% at this point in time. Ashwini, your thoughts on Dish TV and also on Indo Count? That's also down about 8% right now.
See, both these guys are below their 200-day moving averages. So prima facie they are weak. But with this sort of mid-cap action, I think Indo Count, etc., is likely to go even lower, possibly 9,500. Which is the recent lows which happened, I think, in September, October. It can get there. Dish TV again, several attempts to rally, but it's failing again and again. So I don't think even Dish TV is a great stock. In fact, last 2 days it's fallen from 87 to 72. All-time low, or rather recent lows, was about 68. So very close to it. Once 68 goes, you'll probably have a fresh leg on the downside. So both these stocks are highly avoidable.
Okay, well, look at some of the cracks that we are seeing. Uttam Galva, that stock should just come up for you. 18% knockdown on that stock this afternoon. Big volumes as well on Uttam Galva. All that just happening in the last 2 hours. So it's pretty nasty, the jar that we are seeing in the broader market.
Yeah, I think the broader market clearly, we have seen this in the past also, Sonia. 15 stocks in F&O ban as we started today. Yeah. I think it's the highest that I've seen. Also, a lot of these stocks, small cap index, all these stocks running up. So periodically, the market does need some cleaning out. And today, I think we are going through that cleansing. And, we're talking about Uttam Galva. Look at JP Infra. That's been down 10%. I mean, look at Nalco. It's not a mid cap or small cap by any stretch of imagination. That's down about 8%. Federal is down 8%. HCC, NCC, always talk about that as maybe the highest pedigree infra stock. That's down. So just a case of maybe, taking profit home. IDFC Bank and IDFC, by the way, both these stocks are ending at the low point, both down about almost 6.5% right now.
Okay, well, we are still going to track a lot of earnings, and tomorrow is a big day. You have HUL and Zee Entertainment that will be announcing their Q3 numbers. We have both Mangalam and Sonal, stars of our team, standing by to give you the key expectations. Mangalam, first tell me what's the pun on HUL that you're going to start with?
Fair and no, it can't be anything. Fair and lovely. That's all I can say as far as HUL is concerned. Why? Because I've never seen HUL have as many tailwinds as it will be having just ahead of the third quarter numbers. Why? Because it's all about the base. You have the demo base in the year-on-year quarter, year-on-year, and you have the GST restocking base quarter-on-quarter. That is there. Secondly, they have launched the naturals portfolio, Indulekha and Ayush, across the nation. So that would help their volumes. And international parents cost cutting. And the last quarter, Patanjali's mentions in early earnings con calls were the lowest that we saw in 27 months. So, you know, competition is waning, companies ramping up its products, and then you have the effect of the low base too. But does the street know this? Yes, the stock is up 65% at a record high, trades at around 48 times, bluest of blue chips in the consumer space. We're expecting a 10% revenue growth. Margins are expected to improve by nearly 200 basis points, and EBITDA growth of 24%. And the net profit optically looks like it's a growth of 11.5%. But remember, we had exceptional gains in the base quarter. So if you adjust for that, the net profit is likely to grow by 26%, around that 1156 crore mark. Just a caveat for our viewers, the top line may look different because of the various tax implications, GST in the base quarter, excise duty in the base quarter. Watch out for the EBITDA. We're looking at numbers of 1684 crores and a net profit of 1156 crores. The volume growth seen between 8 and 9%. Some of the reports are also indicating 10 to 11%. If the company does go ahead and post the double-digit volume growth, will be the first time they do that since the fourth quarter of FY12. So that is something that the street is really going to watch out for. They have increased their ad spends. A lot of the media companies have said they've seen increased ad spends from the FMCG space. Sonal will talk about that as well. And the revenue growth in home care and personal space is something that we'll be watching out for. Foods are doing well. Let's see what happens as far as the management commentary going ahead is concerned, because input costs, they are increasing. That's the only thing. But a lot of tailwinds for them. The stock is at a record high.
Okay, stock is at record high. Of course, one stock which has also been close to 52-week high, and there's a bit of a link between HUL and Zee, right? If HUL does well, Zee also normally does well, because it's all about ad revenues. But Sonal, what are we expecting from Zee?
We are expecting decent earnings, and now when Mangalam pointed out that the input costs are expected to be higher, so we are also expecting good ad revenue growth. In terms of the headline numbers, we are expecting a 7% revenue growth. Remember that we had the sports business in the base quarter, so we are considering all these numbers, considering the base. And in terms of EBITDA, we are seeing a growth of 8%, but margins are expected to grow only by 50 basis points. But the real growth will be seen in the profits, which are expected to go up around 50%. But again, it drills down to the ad revenue growth. On reported basis, we are expecting an ad revenue growth of around 16 to 17%, because industry say that the ad spends have gone up by 13 to 14% in last 1 year. In terms of subscription revenue, we're expecting a decline of 12%, majorly because we had sports business in the base. On a like-to-like basis, we're expecting an ad revenue growth of around 17% and domestic subscription revenue growth of around 7%. But overall subscription revenue growth is expected to be at around 10%. Where will the higher profits coming from? It'll be from the two releases which we witnessed, that is Kareeb Kareeb Single and Secret Superstar. So they will aid to better profits. However, we are also expecting some increase in the cost because of these two releases, and also because of the costs associated with the Zee Cinema Awards. The management told us that they will be able to do 30% plus margins, so we'll have to see how it really pans out tomorrow.
All right, thanks for that. Well, for HUL, it will be very interesting to hear what the management says, because remember, Patanjali is now tied up with all the online players, Amazon, Flipkart, Paytm Mall, etc., to market their products. So let's see what the next step from HUL is. We'll take a short break on that note. Thanks, Sonal and Mangalam, for that. More market talk lined up on the other side.